Hi Mr. Market, is there a way to earn consistent returns in stock markets in a 3 to 9 months time frame?
Sure, Doctor. The answer to generating consistent returns in stock markets is to trade or invest in special situation calls, along with proper tactical positioning.
That's interesting to know. Could you give a detailed brief about these calls along with a few examples?
Sure, Doctor. First, let me explain you about these calls.
A special situation call is a positional trade where there is a good one-time opportunity in buying a stock with a strong trigger to boost its share price. These investments have a time frame of around 3 to 9 months. While there are some short-term arbitrage opportunities, there are also tactical positional calls of 9 months. They can be classified broadly under 2 categories. One is risk-free arbitrage calls, and other is tactical positional calls based on market conditions. Arbitrage opportunities basically arise out of corporate actions. Returns on these calls are not dependent on market conditions and usually occur when a company is being merged or acquired by another company. When a company comes out with a rights issues where fresh shares are issued at a big discount to the current market price. When there is an open offer in a particular share. These offers might arise out of promoter buying or some other reasons. Or, when a stock is getting delisted from markets. All these events allows intelligent investors to profit from risk-free arbitrage opportunities.
Oh, that's great Mr. Market. Generally, what kind of returns do they provide investors?
Generally, these special situation arbitrage calls can deliver between 10% to 50% returns in a short period of time. But only active investors would profit, as they are little rare.
Okay, and what about tactical positional calls?
Sure, will do.
Tactical positioning calls are generated based on certain recent news or on expectations of a future event, where there is a high probability of its occurrence. Let us try to understand these tactical positional calls with a few examples. For example, when rubber prices are falling down, we analyze the sectors which benefit out of it and zero in on the stocks which are the biggest beneficiaries of it. So based on our analysis, we would generate a call on a stock like Apollo Tyres or Balkrishna Industries with proper entry strategy. Or for example, the trigger could be something like fuel price hike or a deregulation event. We need to gauge the impact of these and check if the market is mispricing those. Based on detailed analysis, investors can build positions in the correct stocks, ahead of the market, and profit from the event trigger as they occur.
Some of the important points to note in these calls are: always be ahead of the market and take positions only after full analysis. This will help you to earn consistent returns.
Oh great, I have understood about these calls. But, how can I receive such well-researched tactical calls?
HBJ Capital provides these special tactical calls under its Bullseye investment package. You get well-researched calls which can give you profits upwards of 35% in each call. You would be given a proper entry and exit strategy on these calls. You would also receive regular updates and proper guidance for executing these strategy calls. Bullseye's previous calls have delivered over 40% returns on each call. Some examples include: our tactical call on Tata Global based on tea prices and entry of Starbucks gave investors over 50% returns in just 8 months. Similar well-analyzed calls were given in stocks like SpiceJet and Mahindra Finance based on triggers like FDI, interest rate cuts, etc.
That's great. I have understood the power of special situation calls.
Good Doctor. For more details on Bullseye and to view sample reports, mail to us at info@hbjcapital.com.